The Netherlands is a leading financial centre with hedge funds and alternative asset managers ranging from start-up size to $10 billion. Finles Capital Management, Rob van Kuijk, Robert Jan van Hoorn and Cliff Go from the Singapore office join me now. Well, Rob, maybe you can start by telling me a little bit about Finles and the unique services and products you offer.
We were founded as a company in the mid-70s, doing financial services. Over time, we evaluated to become only doing hedge fund services. Since recently, basically the last 2 years, we are giving consultancy services. What you see with more fund of hedge fund providers, they're moving into the space of consultancy and advisory. We did the same, and today we're delivering predominantly tailor-made services, in-house products for banks, pension funds, insurance companies, wealth managers, things like that.
Well, Robert, how do you go about your investment process?
The investment process is both focused on the investment side as well as on the operational side. If you look at our due diligence process, we check numerous factors and items. So the focus is on added value of the underlying investment managers. There has to be skin in the game by the underlying investment managers, so they have to have an investment in their own funds. We are conducting checks on the service providers of the funds, so there has to be a separate auditor, there has to be a separate administrator, so it's a lot of work. Normally a full due diligence takes around 3 to 6 months, so you can imagine that this is a serious issue.
And how do you approach managing risk?
We are absolute return type of investors, so but the actual risk management framework depends on several things. So, for example, for our Finles Lotus Fund, that one has a higher risk toleration than, for example, our Finles Fountain Fund, which is a 100% fund of hedge funds which invests globally. But, for example, for the Finles Lotus Fund, it's a hybrid product, so 75% is invested in long-only funds, 25% is invested in hedge funds. So with that 25%, we are trying to manage our left tail risk. So during market stress, this 25% needs to kick in, needs to make up the performance for the long-only funds in portfolio. If we look to the 75% which is invested in long-only funds, what we are trying to do over there is that we target absolute return type of long-only funds. So during market stress, if these fund managers have a top-down view on market which is not that positive, then they can raise their cash balances, for example.
Rob, your Finles Lotus Fund will receive an award for Best Emerging Markets Hedge Fund. So can you tell me about the features of this fund?
Well, the Lotus Fund is not exactly a hedge fund as in the word hedge fund and what people think of that. It is predominantly long only, so it's predominantly trying to capture the betas in the Asian market. And by being long only, as Robert Jan just said, it is 75% of the portfolio is pure equity related. It's not only in fund of long only funds, but it's also for tactical trading in ETFs and things like that. But the 25% of the fund is predominantly meant to cover the risk because the Asian markets are always having sharp downsides. With this fund, I think the most specific, interesting thing for clients is that you're talking about a multi-strategy fund in Asia, but it has daily liquidity, and that is something really unique that you hardly ever see.
Well, Cliff, over to you now. And what opportunities and challenges do you see in Asia compared to the rest of the world?
Well, I think the challenges that we see in Asia is because of the rapid growth that we have seen over the last decades. The distribution of wealth, the have and the have-nots, cause a lot of tension. That has to be well managed, and obviously that's a challenge. I think in countries like China, for example, where we have seen this growth, we see now that we have to see whether they can unlock value from social, let's say, government enterprises into much more of a commercial enterprise without actually compromising the middle class and the people who really work to achieve what the country can achieve. Everybody knows that Asia is where the growth really is. Vast demographics, fast consumer growth, fast population growth leads to opportunities. That has to be an opportunity. I think what we have seen in the past is very much so that a lot of these countries are very export-oriented. I think much more going forward is that we have to identify opportunities that very much relate to the consumer domestic consumption. And I think if we, together with our capabilities within Lotus, can identify those opportunities, it's going to be an extreme opportune and exciting time to be part of.
Well, Rob, finally, what differentiates the Lotus Fund from other managers in your sector?
Well, the key thing, as I said before, is daily liquidity. Clients can buy and sell on a daily basis, which is extraordinary for a fund of this structure. Secondly, what's very important, people do need to invest in Asia. That's where the growth is. The biggest part of this world is emerging, and emerging rapidly. If you look at the middle class, the growing middle class in Asia, it's unbelievable. You're talking about so many people emerging. So if you want to make returns over the long term, you need to invest long only in Asia. That is absolutely a must for every portfolio. What is interesting about this product, you have also the downside protection. And I think that combination is very interesting for people.
Gentlemen, thank you.
Thank you.
Thank you.